Welcome back to Grown Quality. My name is Elian, and in today's video we will do a portfolio update. Now, this portfolio was made specially for YouTube, and I want to start off by explaining you the what and the why of this portfolio, what my goal is with it, what my methods are, and how I want to proceed, how I envision it. Starting off with the what and the why. Now, what is this portfolio? This portfolio is my social media portfolio, like I said. And why do I have this? Well, I want to show what you can accomplish when you continuously add a small amount to your portfolio. So for me, this is a constant weekly 125 bucks in order to invest and to deploy into the markets. Now, starting off, this is not an impressive number or not an impressively big account. That's also not the goal of this account. The goal of this account is to show what can happen when you keep adding to it over time. The only purpose it has right now is to put money in the markets and to try and hold positions which will just fuel the inflows I put into this account. So let's look at my holdings and go through them one by one and see why I hold them and what my philosophy is behind them. Okay, so you can see my portfolio is very small. It's about 1500 euros. I'm from Europe, so 1500 euros. But like I already mentioned, the goal of this portfolio is not to have a big account right now, is to show how it can grow in the future. And doing this, we will see that I have a few defensive growth stock and a few aggressive growth stocks. And that's also the way I want to go with this portfolio. It's tech and growth focused, but some stocks are more, well, I would say more defensive, more mature, and others are more aggressive. They are hyperscalers or in the hyper growth phase. Now, starting off with Moody's as my smallest position, that's of course not a hyper grower. They are a growth company in my opinion. They post good numbers, good growth, but they are a mature business as well. Now, when we look into the numbers, we can see that Moody's grows their revenue at about 7% per year as an average over the past 10 years. And this is, of course, not very impressive growth, but that's not the purpose of this company and my portfolio. The purpose is to be steady. Now, where does Moody's get their revenue from? They basically have the Moody's Investor Service and the Moody's Analytics. So they provide data to companies and they have their debt ratings as they have a monopoly or duopoly over it together with S&P Global. Now, what else? EPS of Moody's, it's growing at a 10% or 9.2% per year CAGR over the last 10 years. This is of course faster than their revenues, and that is what we want to see: improving margins, improving EPS, and EPS growing faster than revenues. That's all very good. And in a video coming up soon, I will go over Moody's in a deeper way, dive a bit deeper into the stock, and explain a bit better why I have it in my portfolio. Okay, so then we have Adobe as my second smallest stock, and Adobe is on a dip recently. Now, investors are afraid that Adobe's moat will be deteriorated by AI from competition of, well, OpenAI, for example, with AI self-made imagery. But in my opinion, I don't really see that affecting Adobe's moat all too much and really take their competitive position. And as we can see, their revenues year over year, well, up to 2023, have also not really shown this. They have grown a bit slower than the average was over the last 10 or 5 years, but still up 10% year over year. And in 2023, we already saw the first innings of the AI boom. Now we can also see here the stock that it is really dipping. It's now trading at $475. It's about my average right now. And if it continues to drop, I may add some bits and pieces to the stock. Now it has some risks, of course, so I won't go all too heavy into it. But I might add a bit to it because, in my opinion, this drop is overdone. Okay, so then we get to the third smallest position, and that is Shopify. Now, Shopify is also a very recent ad. I think I added this last week as it dropped from their earnings report. Now, again, it dropped. I found overdone, but we can't argue with the valuation it had prior to the drop. It still is quite richly valued, but historically seen, it's quite low. So that's the trade off you want to make here. And that's also why I went a bit soft into it and didn't buy it as heavy as I may like to. But if it continues to drop, I will buy more and more shares of it. Now, I also wrote about those earnings on my website, and I said Shopify is now the worst company in the market. And this title came from how much it dropped on those earnings. Because, in my opinion, it was overdone. It beat on every metric. It only said that it saw a bit of a difficult market in some of their geographics. That's all there was to it. Their guidance was good. They beat numbers. They grew 23% year over year on a revenue basis. And taking the logistics business out of it, they grew even at 29%. That's some very impressive growth. And that's what this company keeps on doing and keeps on guiding for. They will continue this growth. And well, that's just very impressive. I can't say it in any other way. Now, as we see here, that drop, it wasn't even a 1 day drop. It continued sliding down. And I'm not sure if it's done falling. It might fall further. And if it does, I'm willing to put more exposure out there to this stock. But for now, as it's still quite richly valued, I'm fine with my position as it is. So then we get to the next stock, and that's S&P Global. So it's the same for Moody's. It's defensive. It's not really very high growing, very fast growing, but it's somewhat of a defensive stock. Now we can see the revenues per segment. They have the indices, so of course the S&P 500, the Dow Jones. They have mobility, commodity insights, the ratings part, which is the most profitable business, and the market intelligence business, which is, well, the most in revenue terms. Okay, so then we get to end phase. And end phase is a bit of a difficult one, I have to admit so. But with my average price of $116, I think I'm quite well positioned for any volatility it brings. We've seen it in the last period dropping to about $130 and then popping back up a bit. I'm positioned right in the trading range. But end phase revenues have dropped extremely much, or an extreme amount. And we can see that here. They went from over 700 million to as low as 263 million in the last quarter. The earnings or the revenues are somewhat artificially suppressed because Mphase has been dealing with a lot of channel inventory. So in the last quarter, they undershipped their sales by about 150 million. So would the issue not be there, they'd have revenues of about 400 million. But then still, a drop from 720 to 400 million dollars. That's a big drop, and that's not good. Now, Enphase has already mentioned that they think the bottom is behind them in Europe and in America for non-California states, but in California they still see issues. Now, what is impressive, however, that during this drop, they mentioned to keep their margins up. They even slightly improved them in some points. Now, in the last quarter, the margin dipped a bit, and while they said this was due to a negative or a slight negative impact on product mix, so they sold more batteries, less microinverters, and that's what impacted the margins. Okay, so now we are going to the good stuff, and we see PayPal standing there. And PayPal is quite a bit bigger than Enphase, and that's because I put, well, a relatively large amount of money into PayPal. Now, PayPal sees a lot of issues, and I think more issues than people expect. They face some unexpected headwinds. And in a video I'm going to release on Friday, I will try to dive more deeply into this. But I see some issues with PayPal. Now, it is also my biggest holding in my personal portfolio. And as such, I think I have quite a good idea of what they are doing, what they are focusing on right now, and what they try to go towards. But they have some issues. And we can see that reflected in the stock. And like I said, the recent drop from almost $70 at their earnings report to now 61 to $62. That's quite a drop. And yeah, I'm going to go into that on my video on Friday and explain why I think that this is happening. But for now, let's look at my second largest holding, and that's Lululemon. Now, I added Lululemon a few weeks ago to my portfolio, and it started off as a small stake or a small position. But as it dropped last week, I increased my exposure to this stock significantly. And why? Once again, I think that the drop is overdone. I also made a video of the issues that were being faced by this stock or by this company last week. So if you want to, you can check that out. But in addition to that video, what I also want to tell you guys about is, well, first of all, here we see that drop down from, well, over $500 to now under $300. But also the China container shipping are increasing rapidly. Shipping rates are going up again. And for Lululemon, that takes a lot of, or produces a lot of their stuff in Asia to sell them in the US. That's not really a good thing. That's quite painful for the stock and it may affect earnings. So, in addition to the things I mentioned in my video last week, this is also something I would like the company to speak about to see where this is going. Is this impacting numbers? How do we have to think about it? Because it is good to know as to why the stock is dropping if, well, this is a big influence on the stock. Now, let's just look at my biggest holding. Now, the biggest holding is Monday.com. Now, Monday.com is not the company I put the most money into. That's either PayPal or Lululemon. But Monday.com is my biggest holding. And it did so because it jumped from $180 to over $240 on their latest earnings report. Now, I have a video going over why I think the sell off happened that went prior to the pop. But it's now up there and it's the biggest holding in my portfolio and I really like it. Monday.com is basically a work management tool, but they have recurring revenues, mostly annually billed, about 80% and 20% monthly billed. They just did a price hike and that was very well received because they keep on adding and adding, well, additional value added services to their business. And, well, in this article on my website, I went over why they popped as much. I went way more deeper in there than I can possibly do in this video. I picked all the good things I found from the earnings report and all the bad things, and also from the earnings call. And I wrote it down and I put it on my website. Now you can also check out my website yourself, and as you can see, I have here a couple of free stock analyses. These are also on my YouTube video or on my YouTube page, but the articles just go a bit more in depth. Talking about the management team on a YouTube video, that's not a great success. People don't want to hear it. So I don't go over it here, but I do go over it there. I check the resume, check what I have worked in order to see if it's not some person that just got out of college and became the CFO of Shopify, just to name the top one on my screen. These are all things that are quite important. And as you can see, I have a bunch of them here. And you can go to my website, subscribe to my newsletter, and you can get any updates of this yourself as well. Now, in addition to this free stock research, I also release the morning market feed, as you can see here. This is something I release every morning from Monday to Friday, except for Wednesday, because that's when I do the stock analysis. And I go over what happened the day prior. So, for example, watching this video today is Wednesday. tomorrow morning, I will go over the more significant moves that happened today. Or as I'm making this video on Tuesday, tomorrow morning, because we had the markets were closed on Monday, I did the stock analysis then. And tomorrow I will go over the moves that happened on Tuesday. So, for example, Celsius Holdings. What happened there? The stock dropped 17% as of filming this video. DraftKings, another one that dropped 12%. Not very good. But what happened, I will explain in the newsletter. And that's Monday, Tuesday, Thursday, and Friday. Now, I would like to thank you for watching this video. And if you liked it, please remember to like and subscribe to my channel. And also don't forget to subscribe to my newsletter. The link towards my website is the top link in the description below. So please go over there. And I hope to see you pop up on my newsletter